The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi, folks. Basil Chapman sitting in for Larry Pesavento. And my show is usually Monday, Tuesday, Wednesday, Thursday, Friday at 11 o'clock till noon. And it's called the Tiger Technicians Hour. My service, of course, is a special service. It's a daily service, a very comprehensive look at the markets. I give an overview and a market today, what we're looking at, why we're looking at, which of the Chapman wave techniques we are looking at. We have one technique that we're waiting to see is going to work, that within 1 to 2 sessions, there should be a good counter trend rally. I'm not sure if the futures this morning, which were up 6, and in fact came back down to negative and then it tried again and went up to a plus 5, counter. Usually it's the Dow itself that moves good 50 to 60 points on the upside. Just a surprise move that occurs when one least expects it. We'll see if it's going to happen between today and tomorrow. That's number one. Number two is I also give parameters on all the different indexes that are very important. So those indices have specifics of support and resistance, and I give them every single day. I also show charts. I also show charts that we might not even be in the positions, but they are Chapman wave techniques that I want my subscribers to learn about. So I show the charts, and I have different ways of looking at charts that are very important. So it's a very comprehensive service, and of course I've got my Traders Corner. My Traders Corner is where we have our positions. Those positions, in fact, we had 7. I usually don't like 7 positions, just getting too heavy. It's just too easy for me to overlook it. I'm busy doing so much work when I'm reading the numbers. I tend to overlook a number by mistake because I'm just looking at so many numbers all day. So I don't like to overdo it that way. So we had 3 longs and 4 shorts. We now have two longs. One was taken out at the price that we paid for it, so it's a break-even trade. And back to 3, because what we did is I added. On one of our positions, I wanted to add, because the idea was to buy it at a certain point and then add lower down, which is what we've done, anticipating that the stop that we've got is going to hold and that it's going to bounce quite nicely, and that better occur very, very soon. So, and the short positions have been working really well, and that's what I've been talking about in this bifurcated market, that it's very important, I think, to identify using your techniques. And those techniques should allow you to look at certain charts and say, hey, those charts look terrible. We can go short those charts, and we can go long other charts, and you can have what I call a bifurcated position in the market. In our Traders Corner, we had 3 longs, 3 shorts, and that's 4 short positions. That basically says that you're looking at the market in a very special way, using special techniques, which is exactly what I do. Now, those techniques I will be teaching. If anyone's listening who's done my level 1, that intensive 2-day course, they give you a thick booklet and charts and chart formations. You get the CD introducing the Chapman wave methodology, 470 slides with about 20 something chapters. Each chapter is designated for certain aspects. But basically what happens is there's a simplicity to this particular technique. You want to go from the lowest, most obvious low bar to the 4th highest peak, and I label them alphabetically. Peak A, then the next one 1 penny above peak A, so it's leg B. It's called leg B until it makes a peak by having a lower high bar. Then it's called peak B. Then 1 penny above peak B, so it's leg C. All you need to do is see a price 1 penny below that leg, and it becomes a peak. So then you get peak C, then peak D. Peak D is where a lot of the learning takes place, because that's where the price can continue higher, obviously. The price can go sideways, obviously, or the price can pull back, obviously. But which of those techniques? How do I use, if you're looking at what is it called? It's Tiger, no, TFN, TFNN.mobi. If you're looking at the whatever device you're using, if you go to, let me just find it right here. What happened? Go back. All right, I'm just trying to do, I always forget to do this. So here we are. All right, here we go. So I'm going to look for Tiger. Yeah, there it is. tfn.com/wowzer 28.php. That's the one that gets me there. There it is. Shows right up. I can see the chart as you're looking at. Here I've got the white chart in the background. So my service is a very comprehensive daily service. I give all the parameters to look for. I give techniques within the Chapman wave, whether we're looking at, oops, there goes the sound. Now let's see if I can actually make that short. Make that, there it is. Okay. There it is. Okay. So what we're looking at is in the newsletter that I send out, you could just skip everything. Although I'd like you to look at so much work that I put in every single day, but you can just look at the Trader's Corner, because in the opening paragraph it's a synopsis of what we're looking at, just a quick synopsis, and then why we're looking at and what we're looking at. So, and then I give about 14, 15, 16 bullet points, and each one of those, number 1, 2, 3, Dow Diamonds, I give the parameters, the SPY, the Qs, the TLT, the GLD, the dollar, just everything, and then plus the positions we have. So right now the bias has been towards the downside with a negative bias, and that seems to be working very well. And the upside bias was working well. We'll see if it's going to continue to work for us at this particular point. And I'm getting limited on the upside. There are some stocks that are still looking very good, but they're fewer and fewer, and more stocks are looking weak. So my bias is going to be that at some point real soon, I probably would like to see a bounce and then a retracement to be able to put in a position maybe on the DXD or the QID that has legs, rather than this whippy 200 points down and 200 points up, where every couple of days is going in a different direction. So it's the bifurcation of stocks that is very important. So now let's get back to what we're looking at. We're looking at the TNX, which is, I was speaking with John from Philly just a short while ago, and we're looking at different aspects of the TLT, etc. And he had mentioned that we should also be looking at the 10-year Treasury bond note interest rate. Well, if you look down the daily, it went from the very thing I talk about, the lowest low bar, that's the dollar TNX.X, that's how I get it, 10-year yield. And at 13.94 on the 24th, it made a low, and it ran to peak A at 15.89, the 27th of July, pulled back, 92. Oh, that's a B there. So you always have to, you cannot, your only obligation in the Chapman wave is to make absolutely sure that you identify each higher peak and each lower trough. That's your job. Everything else will take care of itself. So what it does, it goes to the 6th highest peak at peak E at 18.63, underneath that dark gray line, that browny gray line, which is the 200-period moving average, pulls back to 15.48 on the 4th of September, runs in a single leg A up, or in this case an F, pulls back from the 200-period moving average. Once it's touched it, it means that that area is a magnet. You've got to be careful, because it's going to try to get there. So what happens is it pulls back from the high of 18.92, pulls back, and now it's gone to a quick peak. Let me double check. 49, 49, 48, 51, 48. So this is A. That's A. That's B. That's C. So it's gone what I call a gray ABC in this counter trend move, and that's saying, okay, you could still have one more leg to the upside, but you've got to be careful, because that 200-period moving average is still acting a bit like a repellent. As soon as it acts like a propellant, this thing's going to go over 1850 and retest the 18.92 area. Right now, the MACD and the stochastic are still positive. So that's saying that the 10-year yield is still working quite nicely, and the weekly chart has to break 18.92, 1.892% to really spiral higher. But this particular point is the beginning of the week, so we can't tell. Now, the question was, can the monthly yield make peak Ds? It certainly did. It made it peak F back in January of 2000 at 68.23, pulls back to trough F, troughs on the way down, lowercase letters. Then it makes a peak D at the 200-period moving average. Look how important that 200-period moving average is. Touched it exactly at 53.16 in June of 2007, and now it's been making lower lows and lower highs, and we're going to see if this rally has legs, because if it has, it's going to retest the 23.97 level of March of 2012. Right now it's at 17.96. Now, I had a question in the den, and I said I'd get to it in this hour, and it was about PAS, P-A-A-S, Pan American Silver, P-A-A-S. So I've done it now on the white chart because I'm beginning to think that if I do it correctly, you can see very nicely on the white. Maybe not as good as the black chart, but meantime, black background that is. Let me just go to the monthly chart. I haven't had time to redo the ones that are in black. I seem to have lost it in the black. I've done all these gold stocks. I don't know what's going on. But in the meantime, PAS made a high, Pan American Silver, back at 44.10 in March of 2008, plummets to the 200-period moving averages, goes just below to 8.93, and then starts 8.93 November of 2008, and then starts peak A, B, C, D, Chapman Wave instant restart, new A, B, C, D, goes to an all-time high of 43.06 in April of last year, and now it's gone trough on the downside, trough A, trough B, trough C, and trough D. So all these little truffles to the downside has got a leg A up from the most recent low, and that's the low of 13.49 in July of this year. So the technicals are still very weak. The price action is actually quite good. Now we go to the weekly chart. The weekly chart went to that low of 13.49 the week of the 27th of July. Ran up to peak A at 17.85. It's a silver stock, obviously, at 17.89, 17.85. August, the week of the 24th, pulls back an inside bar and then spirals to a new leg up, going to a peak B at 22.55, 21st of September, week of the 21st. But now look at the pattern that's forming. It's very positive. Now you've got to remember, you've got to learn how to diverse yourself from the price of the metal to the price of the stock. When the price of the metal was soaring, there were so many stocks that just did not follow. So when I look at this, I'm saying to myself, wow, silver SLV has made a peak C and has pulled back, trying to hold, but it closed under the 9-period exponential moving average. I think from the daily and the weekly, it seems needs a little more time, and then it should have a good rally. But PAAS has held way better. It's above the 9-period moving average, that purple line. It is making, you can call this an symmetric triangle. Not my favorite pattern, but if it does break this week, if it closes above 22.04 on Friday, that says, wow, it's probably going to make leg C up above 22.55. So Mitch in the den, I believe, Steve in Oldsmore asked me about this. So PAS, I like it. If you have it, I would say hold on based on the weekly chart if you're an intermediate term position player. Now let's go to there's the music already. Let's go trade what you see. This is Larry Pesavento's show. I'm sitting in for Larry, and this is Basil Chapman. My service is the opening call, and I'm going through charts based on the Chapman Wave. I have a Master Trader Series Level 2 coming up this Thursday all day, and perhaps an Executive Center. If you've ever done my 2-day course, please come. It's going to be so exciting. And then December the 6th and 7th, there'll be a level 1. I'll talk about that a little later on.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Trade What You See is the name of the show. And of course it's Larry's show. But Larry's not back yet, and I'm sitting in, so give a call at 877-927-6648. Just to finish up with past, if you're looking at the 120-minute chart, very good action, but it needs to go above 22.04, and then once it does that, 2140 will be really important support. If it breaks that, then I think it's going to retest the lows. But it's bounced off the 200-period exponential moving average very nicely. It's doing well. So if you're in the stock, and my suspicion is that you're probably in the stock, that's why you're asking about it, stay in the stock. I would start to lighten up on a part of my position if it goes underneath 20.01, which is 1 3/4 points from here. If you're looking intermediate term, if you're in for short term, I would say if it takes out today's low, I'd be out of it. But right now it's looking very good. But there is a rectangle formation, and this could very well, in the 120-minute chart, give you an ABCD that actually doesn't break above the high of 2246 made in October the 5th. So that's the way I'd be looking at it right now. Stay with the positions, acting very well. Gold is holding okay. I still think that gold's going to be going a little bit lower. At least that's my opinion right now. So we'll stop with that, and we're going to go to Ari in Arcadia. Hi, Ari. How are you?
How you doing, Basil?
Good, thank you.
Hey, I sold the silver wheaton, but I'm beginning to get a feel that maybe I should re-enter because short-term we're building up B wave, and we may take out the A wave on the monthly. We're really close.
So, okay, let's just tell what folks what we're looking at. What we're looking at, folks, is SLW, Silver Wheaton. Did I type in the name of this? Let me type it in right here. Silver Wheaton Core. CORP, and there it is. So, folks, what we're looking at is a stock that has gone from the lows of, I wrote that in, from under 5. In fact, let's get exactly the price. The doji low of 2.51. Unbelievable. 2.51 to the recent high in the monthly chart in 2011 of 47.60. Then it pulls back, and it's starting to make a pattern that we know very well. Let me just draw it in here. It goes like that. And it goes parallel. It's already broken the parallel. So let me just get this in here. Parallel. Okay. All right. You're correct. So what we're looking at in this particular instance is there's a stock that has consolidated in time from the 47.60 level down to 22.94. So that's over it's about a 53% decline. And from the 22.94 level has had a single leg move that has taken out the left side high bar of importance, 95, I can't remember if it's 59.95. And if it keeps doing this, it'll take out the next one, which will be 42.50 in September of last year. Okay, so the monthly chart is acting very well price-wise. Stochastic is rallying and expanding between the fast-moving average and the slow-moving average. That's good, but it's only at 56%, although this has a history of moving higher with the stochastic catching up as long as the MACD moves positive. And this month it hasn't yet done it, but it is really close. So now we look at the weekly chart. The weekly chart looks a little bit like the one we looked at a moment ago on PAS. PAAS is a symbol. So this I've got as a peak E, but there is it didn't even touch the 9-period moving average on the pullback. The stochastic's at 91%, and the MACD is still very good. And what we had been talking about before, Ari, was that, yeah, there should be a pullback, and we're going to be watching the weekly because it was holding very well technically. This is what I'm going to recommend because you've done very well so far in your position. So I'm going to say, because you don't want to throw away money to say, oh, I made so much money, I can just throw it at this. But what I am going to say to you is, in terms of risk-reward, there's a possibility it goes towards 491 and it makes a double top and comes down. But I would be prepared and quite comfortable in saying to you, based on the 120-minute cup formation, but it's more like a bowl formation, the steadiness, etc., that this leg in the 120-minute chart looks very much like it'll take out the doji candle at 11:30 on the morning of the 5th of October in the 120-minute chart. If it does it in leg C, that'll be very positive. If it does it in leg D, it says, it could bump into resistance. I'm going to make a recommendation which I think you'll feel comfortable with. And that's what I'm going to say. Well, I'm going to say, start a small position right here. In fact, hold on through the break, and I'll just give you the summation of my idea. But it's to start a position as we speak, but it's really a small position. And I'll explain what I would look at if I was you as the days go on. So hold on, and what I'm saying is start a small position, and then we'll get back and we'll elaborate. Basil Chapman sitting for Larry Pesavento. Trade what you see, and I will be back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
All right, folks, we're back. And Basil Chapman sitting for Larry Pesavento. What I'm doing here is I'm doing some of the Chapman wave methodology, some of the technical studies that I use. These are all techniques that I describe, going to in great detail in my work and my CD introducing the Chapman wave methodology. But in the Master Trader series, I'm going to be giving one for level 1. It'll be a 2-day one for it. You get the CD introducing Chapman wave methodology in good time. You'll be able to study it. It's like reading a book and you just go over the stuff that sticks in your head as saying, oh, I got it. You go back and you review that, and you will find that what I've done is it's the core concept, and from the core concept, all these others, for instance, all these other ideas are elaborated on. I've got something that I call the Chapman wave flat base restart. What is that? It's really a technique that's derived from something I call the Chapman wave instant restart. All of it occurs at peak D. Within it, over the last 6 months, especially over the last 3 months, I've just been finding many, many examples of something that I call the unconventional Chapman wave flat base. So it has this cumbersome title, which is an explanatory title. But in fact, all that happens is that particular title is describing the process by which we look, we use the process and we look at certain stocks in certain contexts. So right now I'm looking at SLW, it's silver wheaten, and what I'm looking at is in the weekly chart there's a pattern that I call the cup and ladle breakout formation. Well, it didn't quite do that. And it also hasn't quite done the cup and handle formation. So it's a mix. What happens is if the price makes a high-level consolidation, there's a really good chance in this case that if silver wheaten breaks and closes on a weekly basis above 40.91, in other words this Friday, if it closes above 40.91, not only does that get counted as a potential for leg F, but it could be a new leg B to the upside. That's the instant restart. I'm circling it right here. And in my CD introducing the Chapman Wave methodology, I discuss in great detail the Chapman Wave instant restart. But wait a minute, you've got the same pattern now in the weekly. So this is what I'm going to say to Ari from Arcadia, who's had SLW, silver wheaten. He's had really very good profits. He had it, and he used Chapman Wave to go from the daily to the weekly, and he's held it and now he's looking at the monthly. That's the way you want to use time frames. It's a beautiful way of looking at time frames. So I'm recommending, he's got profits. In a sense, you want to hold in the back of your mind, you want to say, I've had profits in it, so I've traded it successfully. You don't want to say, oh, I've had huge profits, I can now give away some by taking a gamble. No, you want the comfortability of knowing that your stance before was good. So, Ari, this is what I'm going to recommend. The last high was 40.91. It's holding well. Silver's acting okay. It's really not acting great, but it's got this pattern that I think needs a little bit more time. What happens very often in the gold and silver stocks, I don't have to tell you, you can have gold soaring and you can have many of the gold stocks and silver stocks just lagging, or the other way around. Gold and silver can finally have a break, and suddenly these stocks come on strong. I think that's what we're looking at. So I'm going to recommend you start a small position here. You treat it as if it's a brand new position. You forget about what you've had as winnings. It's a brand new position, and this position is going to allow you to have a bit of a bigger stop. And what I would say to you is, I would even allow the low of today to be taken out, 39.09, but the one that you got to watch is 38.50 from Friday. If 38.50 is taken out, then it's formed a rectangle pattern that's just going to sidle down towards the bar of the 26th of September. That'll take it to 37.91, maybe even to the 36.33 area. At this point, my eye is saying if the MACD is able to turn around to the upside, and the stochastic can actually get some legs to it, if this thing takes out 41, they're going to play catch-up while the price acts very well. So start a small position. I would not do any adding or subtracting. I'd just start the small position. Why? Because if this thing holds very well by Wednesday afternoon, Thursday morning, at that point I would be able to say to you, I think now you can add another small position, or I will say to you, no, just keep it a small position because it's only in a trading band, hasn't taken out to stop it. It's not following through very well. So I hope that helps you.
Thank you, Basil.
Okay, so start a small position with a little bit wider stop than I normally talk about, and we will see. Give me a call maybe Wednesday, and we'll look at it again. Thanks for holding. Let's go to Dan in Miami. Hi, Dan. How are you?
Hi, Basil. How you doing?
Very well, thank you.
I was wondering if you could, I just got in, sorry. I was wondering if you could take a look at TBT and crude oil again, if you have covered that already.
I haven't covered crude oil, but I have covered TBT, but I'll just sum it up real quickly. The TBT on the TBT is the 200% inverse of, it's the ultra-short Lehman 20-year Treasury bond, and it is, in fact, trading right now at 64.67. What's important about this is it is holding quite well, but the stochastic at 81% says that it really should, and the MACD quite good, it really should be pushing towards the 66.35 level, which is the high of Friday, high of Thursday. So now, if you don't mind, I'm going to go back to what I was looking at for the root, which is the TLT, 20-year Treasury Bond Fund. That's acting, it's down 38 cents. It had a good move Friday, but it's acting quite poorly. It's in this gray zone that I'm showing here. It's one of the reasons why I decided I'd stay with the white for a little while, because I'm able to show the zones that I look at much clearer.
Yeah, I'm more interested in watching the monthly right now. The daily is important.
Okay. Well, if you're watching the monthly, I too am watching the monthly, and I'm going to explain what I'd be looking at. The candle that was formed last month is very close to the pattern that I call the Roman candle pattern. And what's happened is it's gone halfway into the wick. My rule of thumb is if it goes halfway into the wick, you've got to be real careful, because that bar could be fully covered. In other words, this could go all the way down to 118.05, but we are talking monthly candles. So it could take maybe 2 months or even 3 months to do that. But once it gets in there, it says, unless there's a very strong move to the upside in the TLT, and I'm also showing you what you don't know because I'd shown it earlier on, is the TLT, which is trading at 121.35. There's a monthly up channel, and it's at the support level. And that support level says that if it was to fill in the Roman candle of last week, not last month, but last week, and go below 119.87, it'll also be forming the pattern that I call the lowercase h, that dreaded h. That's in my CD introducing the Chapman wave methodology. That the whole chapter, it's mentioned many times, but the chapter itself starts chapter 17 slide, I think it was, 332. And what I'd be looking at here is that if bonds during the week start to slide and the TLT is getting closer and closer towards the 119.87 level, that's going to say that bonds are going to be going quite a bit lower, because it's going to, very likely it will test the low of 118.05. So if you're looking at the TBT, that will become a long position, and that will go to leg C up once it goes above 69.00. And it's at 64.69 right now. But if you had to ask me, what position would you take, TLT or TBT right now? I have to tell you that I would wait one day. I would wait until tomorrow, even if I missed the opportunity to get the right position. And the reason being is that the indexes, I'm sure you've been following this, the indexes have been having like 200-point moves in the Dow, 20-point moves in the S&P, and then come back to where they were 2-3 days later. So they're just yo-yo-yoing within a trading band. So I'm looking at stock specific for longs and shorts, which are working way better. So if you ask me the question, what would I do right now? I'd say probably my bias is to be looking to see whether the TBT holds 64.23. If it breaks under 64.23, I think it's going to be going lower. And if the TLT breaks above 121.81, it'll be going higher, but it needs actually the TLT. I said to subscribers, TLT needs to get to 123.50s to really show that it's got legs to the upside. And it's just stuck in this little trading range, which is getting smaller and smaller. So I can't actually use it as a clue to the market right now. I can just say, like the market and like a number of the indexes, it's stuck in a bit of a trading range. What I would do is I'd use the VIX, and I'd say to you, if the VIX, which is at 17.34, takes out the high of Friday, 17.60, then you've got to watch 18.50 as a potential target for the volatility index. Then I suspect the market's going to go quite a bit lower, and I think the TLT goes higher and the TBT goes lower. I hope that helps you.
Great, yeah. Take a look at oil, too, when you get a chance.
I'll do it right now. We'll look at USO. If you don't mind, I'll look at is that okay if I look at the USO, which is the United States Oil Fund?
Thanks a lot.
Okay, thanks for holding, and I'll be talking, you can be listening. So the USO, at this particular point, is at 33.17. It's got the pattern that says it's below in the weekly, it's below an up channel. So now they're two fighting waveforms. The one is that I've got a complete peak D from, you remember how important going to the fourth highest peak is? Now it's a weekly chart in USO. This is basically trading the oil contract, went to 29.02 on the 29th of June. The week of the 29th of June, and then went to 4 peaks higher at 37.17 on the week of the 14th of September. Now it's pulled back very quickly and very sharply. It's under the 9 EMA, and the MACD is just turning negative. The day's young, so the week is young, so I don't want to talk about it. I think to say it's just turning negative right now, but the stochastic's very poor. So this is very easy for me. There's a pattern in the monthly chart that has this dreaded H that becomes an M pattern. The M pattern says, be careful, because if your most important lowest low bar to the left, in this case, the first one would be 29.02, the second one would be 29.10, and then the most important one is 22.74 back in February of 2009. It says if the lower left side low bar of importance, and that would be the 29.02 June contract of this year, if that's taken out, you can anticipate that there could be a pullback all the way to the most important left side low of 22.74. So now let's say what would change that? What would change that is if there's a rally this week that takes the USO above the up channel that was supposed to be support, which is now resistance, and it breaks above 34.87. Let's call it 34.90. 34.90 is only 1.5 up. It shouldn't be such a big deal. But if it can do that, that says, hey, be careful. The bar of the 21st of September all the way to 37.02, the low of 33.96, that's going to be a target bar to trade within the middle of that. So those are my parameters. At this point, I think oil is looking very weak. The weekly is still looking very weak. So, okay, we did that. Now, I had an email that said, hi, Basil, cool, you're doing Larry's show. Triple M, that's 3M, is right at a major pivot. Does 92 need to hold you? Well, this is very important. I don't know if I've got it in a white chart. Yes, I do. Weekly chart made a peak D. Now, this is how important the Chapman wave is. In the weekly chart of Triple M, the weekly chart went from 68.63 to 4 higher peaks at 88.46, the week of the 24th of February, pulls back to the 9 EMA, has one spike to a leg E. Remember, you can go to an E. At round number 90, on the week of the 16th of March, and then pulls back to 81.99, 8 points lower, 10%. Has an 86 round number close, I believe it was. Yep, week of the 8th of June, and then it starts rallying. Peak ABC makes a D 2 weeks ago at 95.46, pulls back last week, and now it's under the 9 EMA. That's the weekly. The monthly is in leg D, underneath the 98.19 all-time high, and way above the 68.63 low from October of 2011. Leg D, month is not finished, way above the 89, I shouldn't say way, nicely above the 89.88 9-period exponential moving average. MACD is good. Stochastic's okay at 81.94. So what do? We look at the daily. The daily is the pattern that I call the dreaded action. Look how many peak Ds we've got here. Folks, if you want to learn about this technique, this very simple technique, and it's not always just identifying the low bar, it's how you count it, what it means, how to constantly keep looking at the higher peaks and higher troughs. Well, if you do that from the low bar of the 4th of June of this year at 81.99, you went to a peak D top at 89.95, 5th of July, pulls back to the 200-period moving average, has another peak D, but then it just squeaks higher to a peak E. So it took you to D, but it also took you to E. That E is at 94.30 on the 17th of August. It pulls back to the uptrend support line, which is at 90.46, twice hit the weeks of the daily chart on September the 12th and 13th. Rallies to peak ABCD, just slightly higher than that most important peak E before at 95.45, pulls back, has a retracement to 95.10, so it can't take out the 95.45 high. 95.46, that should be 46 high, and it plummets down, and now it's making lower lows and lower highs, but it looks like an A to B equals C to D. So this leg B down in the daily chart says, absolutely, you got to be careful because the low of 91.70 on the 28th of September is going to be very important. And the question of should 92 hold? Absolutely, because the MACD and the stochastic are weak. My eye tells me that this is going to go into the candle of the 13th of September between 92.43 and 90.46. So Triple M, one of our guests on, Triple M, one of our Dow quartet, not acting well daily and even weekly. So I'll be back straight after this. Larry's show. Trade what you see. Basil Chapman sitting here.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman, last segment of this show. My pleasure to be here. I got a bunch of questions over the last couple of minutes during the break. One was AMRN, Amarin, what is it, Biopharma, I think it's called, Amarin Corp, PLC, a Biopharma. Now, what's really important about this chart is that in the monthly, I really can't actually see because it's come down from, I'd have to change the range. It's come down from $1,425 and no cents. It's a round number high, all-time high, back in July of 1993. Had a bit of a fall. So it's trading now, let's see, the low was $5 back in September of 2004. So the monthly, I'd have to change the parameters to be able to see it clearer. But so far, the monthly is acting kind of so-so, not great. It's the weekly that chart. We've seen a number of these charts today. In the Chapman way, this methodology is called, I look at it, and it's called the dreaded H, called the lowercase h. You see the way it made the peak G top at 1596. It's pulled back to 10.86 the week of the 10th of August of this year. Then it rallies into a single leg A failure at 1497. Now it's come back and it's broken, but it hasn't closed. 1086 was a low in the 10th of August, the week of the 10th, and it closed at 1088. So it closed 2 cents higher 3 weeks ago. Last week it made a nominally new high, closed in the middle of the towards the bottom of the range, the bottom of the body of the candle. So this week it's trying to hold, and I see some signs in the daily of trying to rally. But, as a biotech, a lot of things have to happen. So if one is in this and you're looking at this as an intermediate term buy and hold, I'd be a little careful for two reasons. One is, if it takes out, it doesn't even have to close. It just has to take out 10.35, which is really not a big deal in a stock like this. 10.35, it doesn't have to close under there. And that was the low of the week of the 12th of October. That'll be very negative. Immediately, my eye would say, be careful, it's going towards the 930s, but maybe even the 888 level of the 200 period moving average support in the weekly. So the rally that was attempted the other day with this is huge proportion from 10.35 on the 10th of October to on the 18th, it is 1270. To almost a 20% gain. No, more than 20% gain. That's big. So now it's given back half, and it's sitting here. But I just would not be hanging around. Somewhere around, if it goes under 10.89, I'd be real careful. I'd take some of my position off. I wouldn't take the whole thing off. Why? Because the candle that was formed, the butterfly candle that was formed on the 10th of October, that looks to me like it could very well be a little bit of support to give another bounce attempt. But I can tell you this. If it closes underneath 1035, that's going to be very negative. The weekly chart starts to look pretty poor. So what it needs to do, the upside down Roman candle of 3 days ago, it needs to get back into the 1205 area so that it can start to test that whole wick of that reversal day. So I hope that helps. Now let's go to the question. Where was the question? Spring around, have a look. I was talking about Triple M. Let me just go back to Triple M. I'm going to show this. I've got the black chart up. I'm not going to do anything. That's the way it is. The black chart shows there's a peak D in the weekly. Now, how is this going to work? What's so important? Well, peak D means that it hasn't closed. It has closed lower on a weekly basis, and that was last week. That says you've got to be careful here because the Roman candle that we were looking at of the 14th, the week of the 14th of September, if Triple M goes into the 91.0 area, if it closes under 91, expect that the candle's wick of 90.46 closes under 90.75. Expect that the candle wick of 90.46 is going to be taken out and it's probably going to go down to the 89s. So you got to be real careful in this market, very selective. I thought I'd look at corn. As we go out, I'll have the corn chart. Corn is acting quite well it needs, if corn, the December corn can go into the 734 level, that's leg C, that's good. I'll be back tomorrow for my usual time, 11 o'clock to 12. My service is the opening call. Check it out on the front page of TFN, plus those very important Master Trader Series.